Hello, this is Billy Gwaltney. Welcome to this episode of the Cover Your Assets podcast. I'm happy to be with you today. Today, we're going to cover another question that came up during the financial literacy series, a webinar that I was on with the American College of Surgeons and their resident and associate physicians. This financial literacy series that they've done. It was related to the question of why should I buy coverage early? And that's a legitimate question. It actually came up in another conversation I had just yesterday with a radiology resident who is 2022 now. He graduates in 2026. And he was thinking about, he was just exploring his options and made the comment, hey, I'll probably wait until I'm in my last year to buy it. I just wanted to kind of get the lay of the land, and which is certainly understandable to want to kind of get a grasp of what it looks like and then put it off as long as possible, especially with tight budgets for trainees. And so in working with thousands of physicians across the country for this specialty disability coverage, this question comes up a lot. And again, I empathize with why it comes up. Eating peanut butter and jelly or macaroni and cheese for a long time and really watching budgets and going into significant debt to get good at being a physician, which we need, is an admirable thing to do and also a challenging thing to do. And so as I address this question, I do it with empathy, understanding that the decision is ultimately yours and each individual's, but I just want to provide kind of the context and the big picture. First of all, if you purchase as a trainee, that is when you get the largest discounts. Okay, so I've talked about this. I covered this in a recent podcast because this came up in the same American College of Surgeons call. So the discounts for trainees are by far the largest to any group or any occupation segment. You can get discounts as an attending, but if you can get them, they're going to be lower typically than you could get for as a trainee, a resident, or a fellow. Technically, you can wait until you're walking out the door as a graduating trainee to get that discount. And so you certainly could do that. The catch is that, number one, you have to be healthy when you do it. And also the cost is higher for each year you're older. So this particular gentleman I was talking to yesterday, I think he's 28. So when he graduates in 4 years, he'll be 32. His cost is going to be about 5% higher across the board each year that he's older. So whatever he buys at age 28, he'll keep that rate forever for whatever he buys at 28. So if he buys $5,000 a month, which is the current amount that trainees tend to purchase, then he'll pay that age 28 rate forever. If he buys at age 29, then all those rates will be essentially 5% higher. By the time he's 32, it's 20% higher, and that assumes nothing else has changed. But we all know that things change. Discounts go away. Sometimes they could be higher, but the discounts right now are really significant. They could get bigger. It'd be difficult to see a discount above 30 or 40%, but it's certainly possible. A lot of times those tend to go down. Those companies that have those larger discounts usually get enough of that business, and then they'll kind of dial back the discount. So there is that. Basically, what I told this person yesterday was, hey, we can talk about conceptual terms, but basically everything we're discussing is going to need to be rebooted in 4 years because a lot will change between now and then. You'll just start from scratch. You'll look at whatever's available then. The companies may be different. The definitions may be altered or different. The discounts may be different. So all bets are off until you get it. But the first key is that if you buy it as a trainee, you get the largest discount. If you waited until you're older as an attending, when you have more money, in theory, then you're going to pay more, not only because you're older, but because the discount is smaller. Also, medical screening is needed for this coverage. But as a trainee, when you buy it, currently, there's no need for an in-person insurance physical. That's been waived. And so it's never been this easy to get the best coverage. They're still medically screening you. They're just doing it electronically, and in some cases over the phone, but mostly electronic. You e-sign some documents and you answer some medical questions either through a secure link or on a phone call. But that's it. And then once you're approved forever. Okay. I can't stress this enough. You go through that once forever. You never have to do the insurance physical once you're an attending. When you're approved, you're in. Okay. And if it's structured properly, your policy would include the future insurability option or the benefit update or benefit increase rider, whatever the particular company you have calls it. And so when you go to increase as an attending, you're going to get that trainee discount on the increase, and you don't have to answer any additional medical questions ever. Okay. So for this person, I was talking to him yesterday and I said, hey, yes, you've got 4 years. Just so you know, a lot can happen in 4 years. You can tweak a back. You can get a knee fixed. You may have headaches. You can get counseling. There are any number of things that can happen that can make that medical screening process more complicated. It doesn't mean you can't get coverage. Okay. I'm not saying the sky is falling. I'm just saying that it doesn't take a whole lot to all of a sudden have exclusions on your policy that didn't have to be there. If you go get your back looked at, if you go to physical therapy for a shoulder or wrist and you're a surgeon, that wrist is going to be excluded, at least initially. I mean, there are a number of things that if you get your coverage after those events happen, they're going to be excluded as pre-existing conditions. But if you do it before those things come up, then you're in and you're good. And if those things do come up, they have to cover those if they become disabling. And so I told this guy yesterday, this radiologist I was talking to, I said, hey, the time to get the insurance is when you think you need it the least. Okay. When you feel the healthiest and dare I say almost bulletproof, when you kind of view the health screening part as essentially a non-issue because you're that healthy. You don't go to the doctor. You don't have a medical history. You don't take prescriptions. That is the time that an insurance company will give you their best. Okay. They'll give you their best coverage at the lowest rate. Okay. That's the time to get it, because I cannot tell you the number of times when all of a sudden people that I've been talking to for months or even years that haven't bought yet, they reach out to me out of the blue and they say, hey, Billy, I'm ready to buy my disability insurance. And I'm blown away at the number of times that what caused them to think of that was they got an eye exam and now they have glaucoma. They went to the doctor because they saw an orthopedic about something related to their shoulder or their knee, or they're having back pain and they're having headaches. They're having any number of things. And those things are now likely going to be excluded. I've had situations where they come to me and they can't get anything because they're about to go into surgery for something and they wanted to get coverage before they had the surgery, thinking that would be that insurance companies would do that. For this best coverage, they don't do that. And so if you've been triggered to get coverage because of an event has happened, by all means pursue it. Okay. I'd be happy to help you and walk you through that, but just be ready for those things that cause you to pursue it to be things that might be excluded or they're just going to be things you have to navigate through. Okay. A good broker would be able to help you do that. They're experienced at it. We know these underwriters and we push them to give the best offer. But just so you know that the goal to get this or the time to get this is when everything's clean. If you do purchase as an attending, you can get access to potential discounts. Again, they're very likely going to be lower and perhaps significantly lower than what trainee discounts would be. You could potentially have access to a similar screening process, but there's a significant likelihood that the insurance physical would be required, although there could be exceptions where that can be waived. Again, a good broker will be able to help you navigate through that. But more importantly, it's going to be more expensive because you're older when you do it. And I think the biggest thing to consider is that by the time we're in our mid 30s or late 30s, we may have more things that are on our chart than we do when we're in our late 20s. That's not always the case. Okay. So you can certainly kick the can down the road and deal with it as late as possible. We have plenty of clients that come on board right when they're walking out the door and they've rolled the dice and they've won. Okay. But we have others that do it, and they won in terms of being able to get coverage, but they have some exclusions that they otherwise would not have had to have. Um, One other thing I discussed with this radiologist was there's no law that says you have to start at 5,000 a month of coverage as a trainee. You could start lower. You could start at 2,500. You can start at an amount that will allow you to check every box that you're trying to check for getting it when you're young and healthy, but just at a lower cost. Now, obviously, the downside is that if you're disabled while in training and you have a $2,500 a month policy instead of 5,000, then you're going to get less of a benefit payment. But that may be totally fine, and it's certainly better than nothing. And what getting a lower amount of coverage does, it allows you to check the box of getting the medical screening taken care of, check the box of getting a significant trainee discount, check the box of making sure that you have the best definitions. And if it's structured properly, those same definitions would be included on any increase in coverage. And then you're covered in the meantime. So don't throw the baby out with the bathwater and say, hey, if I can't get the full 5,000 because I can't afford $150 a month, that doesn't mean you might be able to afford $60 or $75 a month and start at a lower amount and still get the bulk of what you're trying to get accomplished. I help a lot of clients with that. So hope you found this helpful. Be happy to discuss your situation in more detail. Please feel to text me anytime to arrange a conversation. My number is 704-270-2376. Again, 704-270-2376. I'd be happy to discuss your situation anytime. Thank you, as always, for your time. Until we meet again, this is Billy Gwaltney.